Hope you are doing great. And today we are going to discuss about the audit amendments applicable for May 2023 examination. This notes was prepared under corner notes taking method, so it would be very easy for us to recall in an examination. So, with no delay, we'll start the audit amendments And with regards to the audit amendments of small company, the threshold limits for the paid up share capital and turnover had got few changes, where the paid up share capital shall not exceed rupees 4 crore and turnover shall not exceed 40 crore. That is, if any companies it touches till 4 crore and till 40 crore, the paid up share capital and the turnover, it's still called a small company. It's very difficult to remember various kinds of monetary limits, so we have to make sure to grasp as much as we can. So for the paid up share capital, it touches 4 crore, it's a small company, plus if it touches the turnover, it touches 40 crore, it's a small company. A small company till it touches 4 crore and 40 crore of paid up share capital turnover, it's still called a small company. Remember, and both should satisfy the condition. And we have audit committee, nomination, remuneration committee, risk management committee. We'll see one after the another. With regards to audit committee, minimum 3 directors and at least 2/3 of the members of audit committee shall be independent directors. At least 2/3 is the amendment here. And what? Minimum 3 directors we know. And at least 2/3 shall be independent directors. For an audit committee, what the another kind of criteria we'll see. A listed entity having outstanding superior rights, equity shares, all the members shall be independent. This is the old one only, so it's easier to remember. Audit committee, minimum 3 directors, at least 2/3 shall be independent directors, and the entities having SR rights, all members shall be independent. And we'll see the nomination and remuneration committee, 3 non-executive directors. For audit committee, 3 directors, minimum 3 directors, here 3 non-executive directors and at least 2/3 of being an independent directors. Same for the audit committee also, but for the chairperson they have mentioned that he should be an independent director. Why there was special consideration for chairperson that he should be an independent director? You see, the role of the nomination and remuneration committee, it's mostly what's the role of nomination and remuneration committee is evaluating the skills, knowledge and experience of the board and preparing a description of role and capabilities of a required for an independent director. So what they wanted to tell is that what's the duty of the nomination remuneration committee is that in order the company to turn fully into a family business, independent directors should come in place and give their experience or expertise. So what do? They evaluate the skills, knowledge and experience of the independent director for the appointment and deciding the remuneration of the independent directors. So the chairperson should also be independent in order to appoint an independent director. Okay, with that said, the committee may use external agencies like management experts only. The committee may use external agencies by considering various diverse candidates, and evaluate time commitments and when identifying suitable candidates. Thus, time commitments is they cannot go on checking out resumes of thousands and lakhs of candidates. So, they could opt for any agencies like outsourcing of the independent auditors after shortlisting of 20 to 30, they could decide whom shall be appointed as an independent director. So, a nomination committee having at least 3 non-executive directors, at least 2/3 being independent directors and chairperson being an independent directors, what do? They evaluate skill, knowledge, expertise of the board members in order to be appointed into the board as an independent director. They could use external agencies also. And these are the amendments regard to independent director. We'll see them after. We'll see the risk management committee. After we see the risk management, we'll go to independent director amendments. And in risk management committee is not applicable to all companies. It's applicable to top 1000 listed companies. Top 1000, how we know it's top 1000? Market capital valuation. And a high value debt listed entity. It's a high value debt listed entity, and if it's a top 1000 listed company, if it satisfies any of the criteria, it have to form a risk management committee. What's the role of risk management committee? Why they require a risk management committee? In order to formulate a risk management policy. What does that risk management policy consist of? Risk management consists of, whenever there is any kind of risk, you prioritize the risk. First, what you have to do, you have to identify the risk, and after identifying, you have to find some remedial actions in order to mitigate that risk. So a framework for identification of internal and external risk and measures for risk mitigation, that is remedial measures. And why do we need to identify the risk and mitigate that risk? In order our business to survive, in order our business to continue, business continuity plan. The next thing is, the next role is to ensure that appropriate methodology, process, systems are in place to monitor the evaluated risk. We see in SMPE, right, MAVE, DWAI, Six Sigma, after implementing any kind of remedial actions or any kind of solution, what do? They monitor that. The same applies here. After introducing measures for risk mitigation, what do? They monitor. And what do they monitor? Again, is that risk management policy. First, they monitor in a micro level the measures of the risk, and in a macro level the risk management policy itself they monitor. To monitor and oversee implementation of risk management policy. Okay, how long they review? They review the risk management policy at least once in 2 years. At least once in 2 years. To keep the board of directors informed about the decision of nature and content of its discussions, recommendations and actions to be taken. After this committee, these committees, what they were accountable to the board of directors in order for a proper maintenance of the business or business. So whatever they are accountable for, they are accountable to board of directors with regards to the discussions it had taken or recommendations or actions that it had taken. And with regards to the appointment, removal and the terms of remuneration of chief risk officer also was under risk management committee. Now we'll see the amendments with regards to independent director. An independent director should always be a non-executive director. We know that. And he should be a person of integrity, expertise and experience. Why we have to look only for the independent director, the experience, expertise and integrity? You see, business could be a family business, but in order to expand the business, in order to expand the business into a large scale and making it a listed company, a wide range of data or a wide range of skill, knowledge has to be there. So every person in the family or only the promoters cannot acquire so much of knowledge. So what do they hire? They hire expertise in such recommended fields and appoint them as an independent director in order to continue the business or expand or scale their business. So that's why nobody could appoint someone or some or the other as an independent director or enter into the company. He need to have some expertise in order to be appointed as a director, independent director. So for that we have to check the integrity, expertise and experience of that person in order to enter the company. We have to justify the appointment to our shareholders, being promoters. And obviously the independent director should not be a promoter of the company or anyone related to the company's promoters or directors, because he's independent, right? He should be independent. And it's also recommended by company law. No financial relationship with the company or its promoters or directors apart from receiving remuneration. apart from his remuneration, independent director's remuneration, he should not have any financial relationship, and he should also check whether his relatives were holding not more than 50 lakh rupees or 2% of paid up share capital of the company. You see, we'll find few monetary limits such as 50 lakhs or 2% or some other fixed amount or to a plus a percentage. When it exceeds more than 50 lakhs, more than 50 lakhs or more than 2%, whichever is lower, whenever we find any fixed an absolute number and a percentage number, it was always more than. That's actually a blunt reminder for us in order not to get confused in our examination. So we'll see the independent director should not have any relative holding more than 50 lakh rupees or more than 2%. This more than applies to both 50 lakhs and 2% of the paid up share capital. 2% of what? Paid up share capital. And with regards to independent director himself, in last 3 years of the current financial year, that is total 4 years, current year plus last 3 years, he should not have any other pecuniary transaction or relationship with company amounting to 2% or more. You see, you find an absolute monetary limit and a percentage, it is exceeds more than. Here the 2% is included. If he takes transactions equal to 2%, it's a pecuniary transaction of its 2% of its gross turnover or total income. But the happiest part is it's talking about here gross turnover and it's talking about paid up share capital, paid up capital. For the relative, paid up capital 2%. For the pecuniary transactions, you think it as a sale or purchase. Sale or purchase in what? P&L. The highest amount is turnover, right? You remember like that. It's easier not to get confused in examination. And the independent director should not have connection with non-profit organization that receives 25% or more. Again, a percentage without an absolute monetary limit. It includes that percentage, includes that amount. 25% or more, 2% or more of its receipts, turnover again, total income or total receipts or corpus from the company or its promoters or directors or holding subsidiary or associate companies. And the independent director should not be less than 21 years or not be a non-independent director of another company on the board of which any non-independent director of the listed company is an independent director. Okay, we'll see with an example here. Company A, company B, person A, person B. In company A, person A is a non-independent director. In company B, person B is a non-independent director. So what had A asked B? There was a requirement of independent director in company A. So you come and join as independent director. Then what B has said? Even we have requirement of independent director in company B. You come and join as an independent director. This arrangement should not be there. They were talking about that. So such arrangement should not be there. An independent director who resigns or is removed, that is a casual vacancy of independent director of a listed entity, it shall be replaced by a new independent director or at the earliest but not later than 3 months from the date of such vacancy. That is not later than 3 months he have to be refill that independent director requirement. Okay, this is what with regards to amendments of independent director. And with related to related party transactions, a listed entity is required to formulate a policy on related party transactions and review by the board of directors should be at least once in 3 years. We have seen similar kind of limit, right? Risk management. You have to review in risk management committee, review at least once in 2 years. But for the related party transaction, once in every 3 years. Related party transactions shall be considered material. a related party transaction is considered material if it exceeds an absolute and a percentage figure. So what? Exceeds more than that absolute or more than that percentage. So 1000 crores or 10% of annual consolidated turnover. Any, if you see any kind of transaction, related party transaction or pecuniary or transaction with regards to independent director, it was always turnover. It's annual turnover or gross turnover or annual consolidated turnover. If it exceeds 1000 crores or 10% of annual consolidated turnover of a listed entity as per latest audited financial statement, you see, whichever is lower, that is either 1000 CR or 10% of the turnover, whichever is lower. If it exceeds that, it's a material related party transactions. With that, in order to take any related party transactions, what we need to take? We need to take prior approval of audit committee. Audit committee may give omnibus approval. Omnibus approval is nothing but an if condition. That is, okay, you can take until this amount. You can take if you satisfy these conditions. If condition: listed entity shall submit to the stock exchange the disclosures of related party transaction and publish the same on website. Have you seen something like this? SEBI LODR regulations, economic laws. Same. Related party transactions. Related party disclosures. To whom the company shall disclose. It shall disclose. When it shall disclose, we'll see it here. A listed entity for every 6 months within 15 days from date of publication of its standalone and consolidated financial results. From the date of publication, 15 days. Within 15 days, a listed entity shall disclose its related party disclosures to whom? SEBI. High value debt listed entity along with its standalone financial statements for the half year. That is, at the time of issue of declaring the standalone financial results to SEBI, it has to give the related party disclosures then. In what format or what are the description or what the amounts have to be there and what the content should be in the related party disclosures or what disclosures it have to be made. Loans and advances in nature of loans to subsidiaries. 1. Associates. 2. Firms in which directors are interested. 3. Companies in which directors are interested. By the name and amount, what they have to disclose? They have to disclose the name and the amount of what? Loans and advances in nature of loans to subsidiaries, associates, firms in which directors are interested, companies in which directors are interested. Okay, that's it. And what all else it has to disclose? Investment by the loanee in the shares of parent company and subsidiary company, and the transactions of the listed entity in which any person or entity belonging to promoter or promoter group which holds 10% or more. Again, without an absolute monetary limit, only a percentage. That percentage is included. You see, all wars happen at borders, right? All the confusions happen at borders. They give just 10%, whether they have to disclose or not, whether it was material or not. All the confusion occurs there only. So we have to concentrate more on such things, right? Which holds 10% or more shareholding. These are the related party disclosures. Now we'll move with the amendments with regards to NBFC. NBFC classification, before we used to have the types of NBFCs which was related, but now they have arranged in a hierarchical level, like a pyramid. If you think it's a pyramid, a base layer. Base layer is which is smaller in number and smaller in size, which is larger in number. Smaller in the size but larger in number. That is non-deposit taking NBFCs having asset size below 1000 CR. That is until 999 CR, it comes under base layer only. If it's non-deposit taking until 999 CR, it's in base layer. And NBFCs, it's peer-to-peer lending platform, PP, peer-to-peer lending platform. NBFC, account aggregator, AA, non-operative financial holding company, that is, it's actually holding company NBFC which has subsidiaries where the transactions were mostly done in subsidiaries. Holding company, what it does, it just has subsidiaries, it owns subsidiaries, acquires subsidiaries, that's it. It doesn't have much of importance or priority because no transactions were there. NBFC is not availing public funds, not much regulations need to be taken care. Okay, put it in base layer, and not having any customer interface. What all comes into base layer? Non-deposit taking for NBFCs whose asset size is below 1000 CR, that is until 999 CR, base layer. NBFC peer-to-peer lending platform, base layer. NBFC account aggregator, base layer. Non-operative financial holding company, base layer. NBFC not taking public funds and not having any customer interface is base layer. And for the middle layer is something which is more of investment oriented, or which is capital intensive. All deposit taking NBFCs, more risk. When public funds were involved, more risk. That's why more regulations were there for banks, right? All deposit taking NBFCs and non-deposit taking NBFCs having asset size 1000 CR and above. If it touches 1000, it comes to middle layer. It's a 4-figure. Until 3 digit, it's base layer only. If it's 4-figure, middle layer. Standalone primary dealers, infrastructure debt fund, capital intensive. Core investment companies, capital intensive. Housing finance companies, capital intensive. Infrastructure finance company, capital intensive. Anything that is industrial, infrastructure, investment comes into middle layer. Upper and top layer was super damn easy. Upper layer where NBFCs which are specifically identified by RBI as warranting enhanced regulatory requirement. That is few NBFCs which are more risk exposed. RBI thinks they require more regulatory requirement. It was kept under upper layer, and top layer it's usually empty. RBI, if its opinion that a substantial increase in potential systematic risk from any NBFCs in upper layer. You see, when risk was more, it comes under upper layer, and even there was potential systematic risk, it comes under top layer. That's it. These are the NBFC classification criteria. With regards to amendment of appointment of board of directors appointment of manager, or with regards to information to shareholders, the procedure for the appointment of board of directors or manager was discussed in law. What was discussed here is the shareholders approval. What all the communications with shareholders that have to be done. So we'll read these 2 points simultaneously, even though they were 2 separate points. For appointment of any board of director or manager, shareholder approval is a must. It has to be obtained when? Within next general meeting or 3 months from the date of appointment. That is, this approval is taken after the appointment of board of directors. But if that person was rejected by the shareholders previously in any general meeting, a prior approval has to be taken. Same provisions we could see it in additional director, right? Board of directors could appoint additional directors, but they should not appoint him as an additional director if he was rejected or not appointed in a general meeting. So those provisions were these, and a notice what the shareholders would approve or disapprove on what basis. We board of directors or the management or audit committee or the NRC committee have to give the resume of the board of directors or the proposed members, what all the information they have to be given. The notice to shareholders must contain a detailed explanation and justification for recommending such person for appointment or reappointment. On basis of such explanation and justifications, shareholder will either approve or disapprove or not approve. These were with regards to provisions of appointment of directors, what all the shareholders approvals have to be taken. And with regards to information that have to be given to shareholders on the occasion of appointment of board of directors or managers is that what they have to give. They have to give a brief resume of the director, the expertise and expertise of such director, and any other relationships with between the directors, and what all the directorships it has in what all companies, and what all the memberships it had in what all committees in past 3 years. From past 3 years, what all the directorships he had, what all the memberships he had, directorships in entities, listed entities, and memberships in the committees, and shareholding of non-executive directors. These are all the information that have to be given to shareholders on the occasion of appointment of board of directors or manager. And what all the additional information that have to be given to shareholders was information to shareholders with regards to annual report. They have to give the annual report in soft copies or hard copies. When they have to give not less than 21 days before AGM. If you have email addresses with the company of the shareholders, with email addresses of shareholders with the company or depository, you could soft mail them, or you could give soft copies and hard copy if they have requested. Amendments of peer review. Whenever you find any kind of technical standards, peer review as per technical standard or ethical standards, what all you have to add on is audit quality maturity model is the only add-on that was the amendment. Now we'll see the further processes. Reviewer. A reviewer shall be a member duly approved and empaneled by the board on fulfilling of few qualifications as prescribed. So a branch reviewer is also a reviewer who peer reviews the branch of a PU. That is practicing unit reviewer appointed to conduct the peer review of the branch of a practicing unit. New audit. This is a new definition. You see, with the respect to new unit, there were two criteria. First thing is a time, that is 12 months time, and second thing is assurance services. If the practicing unit was under 12 months, that is first condition. If it's under 12 months, you need not see for the second condition, that is assurance service. So it's a new unit. If the first condition 12 months was crossed, you have to go for the second condition, that is assurance services. That is, assurance service should not be made in that year, in the whatever the time period that it was established, till it has established. So if it's 12 months below, it's a new unit. If it gives or it provides or it do not provide assurance services, if it crosses it, if it exceeds 12 months period, it should not give an assurance service to become a new unit. So all the units which do not give assurance services even after 12 months were also considered as new units. A new unit means a firm established for less than 12 months immediately preceding the date of receipt of application of peer review, and which may or may not have rendered any assurance services during the said period, or a practicing unit is in existence for a period exceeding 12 months but not rendering any assurance services. Okay, that's the definition with regards to new unit. And the criteria of peer review, there were no special changes with that. Mandatory, voluntary, special case. And mandatory is peer review can be mandated for such practice unit as decided by the council. Okay, and voluntarily is something suo applied to the board for a peer review to be done. Any practice unit may suo apply to the board. For the special case is that board, on receipt of any information, is of the opinion that it requires a special review for such practicing unit, it may mandate the practice unit to go under a peer review process. So mandatory, voluntary, special case on receipt of information. Peer review mandate is only the significant amendment that had happened here, and we'll discuss that. Previously, the practicing units which undergoes peer review were categorized into 2 levels. Now they were divided into 4 phases. That's it. And it's so simple also. Peer review certificate by practicing unit should be a prerequisite for undertaking audit of all entities falling under phase 1, 2, 3, 4 of the mandate. What they are saying is that in order a practicing unit to go for or apply to do any kind of audit, it need to have a peer review certificate. When you will get peer review certificate, a peer review certificate will be given when you undergo the process of peer review. Issuance of peer review certificate. After the peer review certificate or after the peer review process, if the peer reviewer had given a unqualified opinion, that is a clean report issued by peer reviewer, the peer review board secretary shall place the report before the board. Which board? Peer review board, for consideration and issuance of peer review certificate to the practicing unit. That is, as soon as the reviewer submits the report, what the board shall do? The board shall give a peer review certificate to the practicing unit, which is a prerequisite to get audits. These certificates issued by the board shall be noted by its meetings. Obviously, there need to be a record, so they note them. And certificate shall be duly signed by chairman, vice chairman and secretary of the board. Who shall sign the certificate? Secretary, chairman and vice chairman. The peer review board secretary shall serve peer review certificate upon practicing unit and update that list on ICI website. Okay. That's the duty of peer review secretary. He updates it ICI website. Peer review certificate issued to a practicing unit shall be valid for a period of 3 years. Okay, that's a validity time period. And now we are seeing the phases right here. Phase 1, that's where the effective date is 1st April 2022. A statutory audit of entities whose equity or debt securities are listed in India or abroad. All the practicing units are undertaking statutory audit of any entities whose securities were listed, whether in India or abroad. Phase 2, that is 23, 1st April 23, 22, 23, 24, 25. Phases. 2 plus 1, 3. 1 plus 1, 2. 4 plus 1, 5. Simple. No need to get confused. Undertake statutory audit of unlisted public companies. Why listed companies were not there? Listed companies were already included in phase 1. Previous year only they have included. So for the next year, it was most like a India's transition. Same. Unlisted public companies who's having paid up share capital not less than 500 crore, that is minimum 500 crore paid up share capital, aggregate total turnover minimum 1000 crore, aggregate deposits loans that were taken from banks or financial institute minimum 500 crore as of 31st March of previous financial year. Unlisted public companies having paid up share capital minimum 500 crore, aggregate turnover minimum 1000 crore, aggregate deposits taken minimum 500 crore of previous financial year 31st March, or this is for the company, that for the client, this is for the auditor, this recommendation, or this is an or practicing unit rendering attestation services and having 5 partners or more. 5 partners or more. Okay, that's for the company and for the auditor. There's an or condition, not an and. For the phase 3, 1st April 2024, statutory auditors of the entities who raised funds from public or banks or financial institutions over 50 crore during the previous year period under review. That is, if you take 50 crore, no, it does not, the phase 3 is not applicable. If it's more than 50 crore, that is 51 crore or 50.5 crore, phase 3 is applicable. That's for the company. But for the auditor, with an or condition, that is either the client or the auditor, whoever satisfies, it comes under that. A practicing unit rendering attestation services having 4 or more partners comes under phase 3, peer review mandate. Phase 4, with effective from 1/4/2025, audit of branches of public sector banks. That's a client, public sector banks, or practicing unit rendering attestation services having 3 or more partners. Phase 4. That's it. It's so simple to remember. Now, with regards to peer review board, how many members do they consist of? They consist of minimum 6 members and a maximum 12 members, and at least 50%, not less than 50%, that is at least 50% are members of the council. Which council? ICI council. Eligibility of reviewers, 7 years of assurance practice experience. Have you heard this assurance practice experience somewhere? In new unit assurance service. Now, okay, we have read this issuance of peer review certificate, right? Now we'll go with amendments with regard to peer review process and reporting by peer reviewer. A practicing unit which decides to get peer review, that is voluntarily, or initiated by board, that is mandatory or special case, then practicing unit shall make an application in form 1, that is it need to give recommendation, it need to give answers or questionnaire. Application cum questionnaire is form 1. So it all starts with form 1, the peer review process. And after submission of that peer review form 1, within 3 working days, the name of 3 reviewers shall be recommended by board to practicing unit. After submission of form 1, that is the initiation point. Within 3 working days, names of 3 reviewers were given by board to practicing unit. Then after that, within 1 working day, the practicing unit shall select 1 out of the 3 recommended reviewers. Then after selecting the peer reviewer, the board shall appoint peer reviewer selected within how many days? 2 working days, and intimate the reviewer to submit declaration of confidentiality in form 2 to practicing unit within 2 working days. Okay. After selection within 2 working days, what do the board do? Board shall appoint the peer reviewer selected and ask the peer reviewer to submit form 2 and declaration. What that form 2 is? Form 2 is declaration of confidentiality within 2 working days. Then after submission of form 2 within 2 working days, practicing unit shall provide form 1 that is submitted to the board to the reviewer. That is, they are exchanging the information. In order to empanel into the board, the reviewer shall submit the declaration of confidentiality to the board. Now in form 2, the reviewer is submitting to the practicing unit. Practicing unit submitted form 1 to the board. Now submitting the form 1 to the peer reviewer in a span of 2 working days. Then after submitting of form, as soon as possible or immediately, what the peer reviewer should do? Peer reviewer shall intimate about the proposed visit, that is on-site visit, and proposed sample selected to be kept ready by practicing unit, and the proposed sample selected are to be intimated by the peer reviewer in form 5, and the additional clarification in form 6. The samples that need to be selected were sent in form 5 by peer reviewer to PU, and additional clarification in form 6. And within 1 day, the PU shall submit additional information to the peer reviewer after from submission of form 6 within 1 day, within 1 working day. And from that, after additional information submission within 2 working days, the selected assurance service engagement that he would like to review and intimate the same to PU in form 5. After that, he had to select some engagements that he wanted to review and submit it to practicing unit in form 5 in 2 working days. And within 2 working days again, the PU shall keep ready the necessary documents of the selected assurance services, and from then within 20 days the peer review process shall be completed. And within 6 working days, if it's a new unit, the peer review process shall be completed. First, Form 1 is submitted. Then within 3 working days, names of 3 reviewers were given. Then within 1 working day, select one. And see, all that is one only. Except for additional information, all that time limits were 2 working days only. Except for additional information. Name of 3 reviewers, select one, and within 2 working days he shall submit Form 2, and within 2 working days from then PU will submit Form 1, and peer reviewer will give Form 5 and Form 6, and then in Form 5 he will select what all the engagements he wanted to then, and within 2 the PU will have to keep ready the information, and within 20 working days peer review process complete. After the peer review process was completed, how the peer reviewer will report that. First, after completing on-site review, peer reviewer shall submit the peer review report to the board along with Form 9. In Form 9, a copy of report shall be forwarded to the board and the PU. If the systems and procedures in practicing unit are deficient, communicate his findings to PU in a preliminary report. If the systems and procedures in the practicing unit are deficient, that is, that forces the reviewer to give a qualified opinion. First, he'll give preliminary report to the PU. He directly don't go to the board. He gives it to the PU. Within 2 working days, make its submission and representation, that is response of the PU in writing to the reviewer. That's one thing. After that, if the reply was satisfied, he'll submit an unqualified peer review report, that is a clean report, in Form 9 along with Form 9 to the board and forward it to PU, send a copy to PU. And if it's not satisfied by the reply of the PU, what he'll do? He'll submit a qualified peer review board along with Form 9, and a copy shall be submitted to PU. And what all the documents he have to accompany with the peer review report, whether it would be a qualified or unqualified. Annexures to that report has to be accompanied, and a copy of questionnaire as received from the practicing unit, that is Form 1, and the list of samples selected by him, Form 5. Preliminary report, when the systems and procedures were deficient, the preliminary report that he submitted to PU. And the peer review board secretary shall place the report before the board for consideration. When there was a qualified report, when he gives a qualified report, the board may decide for follow-on review after a period of 1 year from the date of issue of report. So these are the process and reporting process by the peer reviewer. And the summary here is, these summaries were not so super important, but when you go 1 hour before the exam, you go and just refer to this. It would be more helpful. The summary portion. The statement of significant related parties are not mandatorily reviewed by the audit committee. Significant related party transactions were not mandatorily reviewed by the audit committee. And the appointment of non-executive director as a chairperson of the board of top 500 listed companies as defined by the market capitalization at the end of the previous financial year. This provision will not apply to listed entities. That is, a chairperson should be a non-executive director. But this will not be applicable to listed entities when the promoters were not identifiable. That is, they do not have share capital. So this this non-executive director provision is not applicable to them. They can appoint some other individuals as their managing director, etc., who is not a relative. That's it. A listed entity shall submit a quarterly compliance report on what? Corporate governance in format specified within 21 days from the end of the quarter. Yes. Peer review certificate is valid for 3 years. That's it. And these were all the amendments for the May 2023 for CA final. Hope you have quality time here, and share it with your friends so that it would help them in their preparation. And thank you. Please subscribe for more.